Welcome to Orange US Stock Research. Today we're doing a deep dive into Strategy, formerly MicroStrategy, ticker MSTR, one of the most controversial stocks on the Nasdaq. This company transformed from an enterprise software firm into the world's largest corporate Bitcoin holder. Let's get started. Here's what we'll cover: company overview and transformation, software business fundamentals, Bitcoin Treasury strategy and key KPIs, competitive moat, growth potential and catalysts, risk assessment, and finally valuation with our score and investment stance. Strategy was founded in 1989 by Michael Saylor as an enterprise analytics software company. In August 2020, Saylor pivoted dramatically, adopting Bitcoin as the company's primary treasury reserve, calling it digital gold and an inflation hedge. In early 2025, the company rebranded to Strategy. Today it runs a dual model, a legacy software business plus a massive Bitcoin treasury that dominates the balance sheet and drives the stock price. Key facts: as of March 2026, MSTR trades on Nasdaq at approximately $134, with a market cap of $44.6 billion and about 334 million shares outstanding. The company holds 720,737 Bitcoin, roughly 3.4% of all Bitcoin that will ever exist. CEO is Phong Lo. Michael Saylor serves as executive chairman and remains the architect of the Bitcoin strategy. The legacy software business generated $477 million in revenue for full year 2025, up 3% year over year. Q4 revenue was $123 million, beating estimates. The standout metric, subscription services, grew 62% year over year, showing the cloud transition is working. While investors focus on Bitcoin, this software business provides a stable recurring revenue base that covers operating expenses. Q4 2025 earnings, reported February 5, 2026, revenue of $123 million beat estimates. But GAAP EPS was negative $42.93, massively missing the consensus of positive $46. Operating loss was $17.4 billion, net loss $12.6 billion. Full year 2025, operating loss $5.4 billion, net loss $4.2 billion. These enormous numbers are almost entirely non-cash, driven by Bitcoin's price movement under new fair value accounting rules. Key insight: starting 2025, digital assets are reported at fair value. Unrealized gains and losses hit the income statement directly. When Bitcoin fell in late Q4, Strategy's reserve dropped $17 billion on paper. No BTC was sold. It's a mark-to-market adjustment. Focus on BTC Yield, not GAAP losses. The core of the Strategy story: as of March 2026, the company holds 720,737 Bitcoin acquired at a total cost of $54.8 billion, averaging $75,985 per coin. At current prices around $65,000 to $66,000, the reserve is worth approximately $47.3 billion, meaning the company currently sits on an unrealized loss of about $7.5 billion. This number moves daily with Bitcoin's price. Strategy has made 101 separate Bitcoin purchases since August 2020. Accumulation accelerated sharply in 2024 and 2025. In 2025 alone, the company added roughly 225,000 BTC. Notable purchases include 55,500 BTC for $5.4 billion in late 2024, and the most recent purchase of 3,015 BTC on March 2, 2026. The buying has been relentless and shows no signs of stopping. Strategy's key proprietary metric is BTC Yield, the percentage change in Bitcoin holdings per diluted share. It measures how much BTC each share represents, accounting for dilution. For full year 2025, BTC Yield was 22.8%, within the target range of 22 to 26%. The company generated $8.9 billion in BTC dollar gains versus internal KPI floors. Year-to-date 2026, BTC Yield stands at 0.4%, with 2,706 BTC gained so far. Balance sheet highlights: digital assets ended 2025 at $58.9 billion, up from $23.9 billion a year earlier. Long-term debt is $8.2 billion, net leverage 10 to 13%. In 2025, the company raised $25.3 billion in capital, doubling its equity base. Management's stress test: Bitcoin would need to fall to $8,000 and stay there for years before the reserve merely matches net debt. Strategy has built a multi-layered capital structure to fund Bitcoin purchases. MSTR common stock gives leveraged BTC exposure. STRK preferred stock pays an 8% fixed dividend. STRF preferred pays 10%. And Stretch, the newest digital credit instrument, pays 11.25%, roughly 18% tax equivalent yield. This diversified stack lets the company raise capital from equity investors, income seekers, and credit investors simultaneously. One critical concern: annual fixed obligations, interest plus preferred dividends, total $888 million. The software business covers operating expenses, but this $888 million requires continued capital market access. In a prolonged bear market where both Bitcoin and equities are down, the ability to raise new capital could be severely constrained. Strategy's moat rests on 4 pillars. 1. First mover advantage, 4+ years as the pioneer of corporate Bitcoin treasury. 2. Unmatched scale, 720,000 plus BTC, no other public company comes close. 3. Capital infrastructure, proven ability to raise $25 billion plus annually. 4. Brand, Michael Saylor is synonymous with corporate Bitcoin adoption. But the moat has real cracks. The core advantage is financial engineering around Bitcoin, not technology, patents, or network effects. Any well-capitalized company could replicate this strategy. The software business competes against Microsoft, Salesforce, and SAP without a dominant position. And critically, the entire moat evaporates if the long-term Bitcoin thesis fails. The bull case is compelling. Bitcoin's 15-year compound annual growth rate exceeds 90%. MSTR provides roughly 3.5 times leveraged exposure to Bitcoin through its equity structure. The 2025 capital raise of $25.3 billion demonstrates unmatched scaling ability. Institutional ownership is growing, with major asset managers now holding MSTR. Analyst consensus target is $394, nearly 200% upside from current levels, with the highest target at $705. 4 key catalysts to watch. 1. Potential S&P 500 inclusion would trigger massive passive fund buying. 2. Favorable U.S. crypto regulation could accelerate institutional adoption. 3. The next Bitcoin halving around 2028 has historically preceded major bull runs. 4. Growing corporate Bitcoin adoption validates Strategy's approach and drives BTC demand higher. Risk number 1, Bitcoin price. MSTR is a leveraged Bitcoin bet, amplified gains and amplified losses. The average cost basis is $75,985 per Bitcoin, and with BTC currently below that level, the company is already in an unrealized loss. The stock has already fallen 70% from its 52-week high of $455. A severe crash to $30,000 or lower would put enormous pressure on the balance sheet. Risk number 2, shareholder dilution. Shares outstanding have doubled from roughly 165 million in early 2024 to over 330 million today, in just 2 years. Another $6 billion of convertible debt will convert to equity over the next 3 to 6 years. Management argues BTC Yield compensates for dilution. But in a flat or declining Bitcoin market, dilution destroys value without offsetting gains. Risk number 3, concentration and regulatory risk. Strategy holds a single asset, Bitcoin. There is zero diversification. Adverse regulatory actions on crypto could directly impair the business model. The company also depends entirely on capital market access. A credit freeze or loss of investor confidence could be devastating. And key person risk around Michael Saylor is significant. On valuation, traditional metrics are meaningless here. The stock trades as a Bitcoin proxy. Market cap of $44.6 billion versus net Bitcoin value, reserve minus debt, of approximately $39 billion implies a price to NAV of 1.14 times. At its 2024 peak, MSTR traded at 2 to 3 times NAV. 13 analysts cover the stock with an average target of $394 and a high target of $705. But all of this is entirely conditional on where Bitcoin goes. Here's the scenario analysis. At $50,000 Bitcoin, net BTC value is $27.8 billion, 38% below current market cap. At $75,000, net value reaches $45.9 billion, slight upside. At $100,000, net value hits $63.9 billion, 43% above current market cap. At $150,000, net value reaches $99.9 billion, more than double. The entire investment thesis is a bet on Bitcoin's future price. Financial health summary. Positives include a manageable 10 to 13% net leverage ratio, exceptional capital markets access, and $477 million in stable software revenue. Concerns include $888 million in annual fixed obligations, deeply negative GAAP profitability, and an unrealized loss on current Bitcoin holdings. Overall, adequate for now, but heavily dependent on Bitcoin prices and continued market access. Our comprehensive scorecard across 5 dimensions. Business fundamentals, 14 out of 20, stable software, not a market leader. Financial health, 12 out of 20, manageable leverage, but high fixed obligations. Competitive moat, 15 out of 20, strong first mover and scale, Bitcoin dependent. Growth potential, 16 out of 20, enormous upside, highly binary. Risk management, 8 out of 20, extreme concentration and dilution. Total score, 65 out of 100. Our stance, cautiously bullish. MSTR is a leveraged Bitcoin bet in a public equity wrapper. If you have strong conviction that Bitcoin will appreciate over the next 2 to 5 years, MSTR offers amplified upside. If you're uncertain about Bitcoin, the dilution, volatility, and concentration risks make this a stock to watch rather than own aggressively. Position sizing is critical. 5 key takeaways. 1. Undisputed leader in corporate BTC Treasury with 720,737 Bitcoin. 2. Roughly 3.5 times leveraged Bitcoin proxy. 3. Stable $477 million software revenue base. 4. Significant risks, dilution, concentration, $888 million fixed obligations. 5. Valuation is entirely driven by Bitcoin's future price. Score 65 out of 100. Stance, cautiously bullish. This video represents personal opinions and analysis only, intended for informational and educational purposes. It does not constitute any investment advice, recommendation, or offer. Thank you for watching Orange US Stock Research. Like, subscribe, and see you next time.